Economic data published on July 16, 2025. Key highlights. Producer Price Index, PPI, June. Monthly change flat at 0.0% below the 0.3% gain seen last month. Core PPI, excludes food and energy, 0.0% month-on-month, was 0.4% in May. Annual change. Core PPI up 2.6% year-over-year, down from 3.2% in May. Mortgage market. 30-year mortgage rate rose to 6.82% from 6.77% last week. Mortgage applications dropped by 10% this week. Mortgage market index declined to 253.5 from 281.6. Producer prices stayed below forecasts, supporting other evidence that price increases are moderating. Money supply reported at $21.94 trillion. Net capital flows, net long-term TIC flows at minus $7.8 billion, suggesting foreigners sold more U.S. securities than they bought in May-June. Market in broader context. Stocks, U.S. equity futures dropped in response to the soft PPI and as investors anticipated financial sector earnings and new inflation and policy signals. Yields, U.S. 10-year Treasury yields have pulled back modestly after recent highs, signaling better inflation expectations. Tariffs and GDP. Despite resilient employment and wage data, forecasts indicate only modest GDP growth for 2025, 1.3% due to tariff uncertainty and weaker consumer spending. Q1 GDP contracted 0.5%, but equipment and software investment surged by almost 22% as firms moved to beat tariff-related cost increases. At a glance table. Indicator, latest value, previous, notes. PPI month-over-month, 0% plus 0.3%, softer than expected. Core PPI month-over-month, 0% plus 0.4%, reflects subdued input costs. Core PPI year-over-year, 2.6%, 3.2%, easing price pressures. 30-year mortgage rate, 6.82%, 6.77%, rates ticking up slightly. MBA mortgage applications, minus 10% plus 9.4%, demand cooled. U.S. money supply, 21.94 T. Net long-term TIC flows, minus 7.8 B. Foreign portfolio outflows. Summary. The economic data published today show cooling in producer prices and a slowdown in mortgage activity with soft PPI numbers supporting views that inflationary pressures are abating. Still, uncertainty from tariffs, slowing consumer spending, and capital flows remains in focus for markets and policymakers as 2025 progresses.